Hello, everyone. We wanted to kind of spend some time going over where we think we are in the overall commodity asset class. If you're going to be able to look at future price, you have to be able to take a look at where commodities are priced relative to everything else. One of our favorite charts that's on the screen right now is commodities prices relative to stocks. We all know the stock market's been going up every day, every week, every year, running way to the upside as commodities have languished. This chart on the screen is a relative value chart. It's a ratio chart. And if you can see right now, I've drawn 4 circles at the bottom. The last three times we were this low, meaning commodities were this low relative to stocks, we began a 10 to 15-year bull market in agriculture and a 10 to 15-year period where commodities outperform stocks. We are there right now, yet again. As of the end of December, we are exactly at this critical juncture that has been an incredible important turning point for the commodity asset class, of course, which impacts the prices of agriculture in general. So that's extremely important to kind of get your hands around where we are with that. The next slide is a slide where we go over Bitcoin, which has been in the news, had a massive bubble, stocks, of course, commodities in general, grain markets, and soft markets. Soft markets are coffee, cocoa, cotton, and such forth. And what we've done is we've placed where we think each of these groups are on this bubble chart, which is a classic bubble chart of how bubbles tend to advance and then decline. As you can see, Bitcoin bubble has popped. Stocks are almost about to pop. Overall commodities are sort of in the very first or second inning, but look where grain markets are, where most of what you grow is. It is at the very beginning of the bubble cycle. So what we want to impress upon everyone here is that we are just getting started. Crude oil's already ran up a lot. Copper's run up a lot. A lot of the precious metals have run up a lot. That is actually normal. We normally see those markets go up first, and then agriculture comes thereafter and catches up big time. The next chart is a chart of agricultural prices relative to metals and energy. So it's another way of trying to see where is agricultural sitting relative to its counterparts. Once again, what you can see is agricultural prices relative to energy and metals is about as low as it can be, and it's always occurred during just before big moves in agriculture and outperformance of agriculture relative to other commodities. This next chart is winter wheat. It's a relative value chart of winter wheat against the continuous commodity index. The continuous commodity index is a measure of 17 equal weighted of the most widely traded commodities in the world. It's been in existence since 1949, has not changed in all that time. So it's a great way to measure a particular commodity price relative to everything. Think of it as the PE of a stock. It's the PE of a commodity. Winter wheat at the end of December was trading at the lowest relative value price to overall commodities in 50 years. 50 years. Meaning in the last 50 years, winter wheat has not been as cheap as it was at the end of December. That is absolutely remarkable. The cheaper the market, the bigger the move. And corn and soybeans are also showing, very cheap relative value indicators, but wheat really is icing. That's the one that really jumps off the page and you go, wow. It's just an incredibly, anyone bearish winter wheat or wheat in general with that kind of evaluation, I just don't think that they're thinking about things correctly. I don't think they're thinking about the historical precedent. If you look at this chart, every time winter wheat has gotten this cheap in the last 50 years or even close to this cheap, it began a massive 2 to 3 year bull market in wheat. So the way we look at things, we let our indicators kind of help us along and kind of be a prism for our thought processes. We don't see any reason why wheat would not show similar behavior with this kind of cheapness. Has wheat lost its value in the world? Is wheat somehow no longer needed? And we found that wheat is bad to the body? No, wheat is as relevant today as it was 10 years ago, 20 years ago, 30 years ago. So as a result of that, once again, the grain markets and especially the wheat market are extremely, extremely exciting to us. And we feel that is going to be kind of a catalyst for the whole thing. The other thing that we wanted to talk about, which you have to, is the U.S. dollar. Every major turning point in overall commodities and in agriculture has occurred when the U.S. dollar has topped. Since we came off the gold standard in the early 1970s, the U.S. dollar has gone through a very, very reliable 8-year cycle, meaning 8-year down, 8-year up, 8-year down, 8-year up. The 8-year up ended the first half of 2017, and the U.S. dollar topped out in January of 2017 and has been falling ever since. We have now begun a bear market in the U.S. dollar. Everyone knows, I'm pretty sure in this room, that a weaker dollar translates into higher U.S.-based commodity prices and agricultural prices. So with a U.S. dollar bear market, now remember, this is year 2 of 8 years to come. We have a long way to go in the U.S. dollar currency devaluation inflation trade that always tends to pump up commodities even more than the fundamentals would allow. So keep an eye on the dollar, keep an eye on how cheap everything is, and understand that where we are is at the beginning of not a 1-month move, not a 3-month move, but a 3, 5, 10-year move in overall commodities and in agriculture. As such, please protect to the upside in price. Thank you.